Is this you? Planning out your option trade? You don't know which one to pick? What does this option open interest and volume mean? Find out the answer to that question in this video. Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And in this video, we are completely breaking down the open interest and volume. So you're gonna see that when you're trading options. So this is gonna be really helpful on how you can start using that information to your advantage. Here's 3 things that I want you to get from this video. 1, options volume is gonna give you the activity and liquidity of contracts in that option market. All right, so it's gonna give you a lot of information about how easy it's gonna be to get in and out of that trade. 2, option volume shows how many buy and sell trades happened in that time period. And that's going to kind of give you the strength of what's going on with that. 3, and the open interest is the number of option contracts that are still open. So these are trades that you can possibly become a part of. They're still open. Okay. But first, if this is your first time watching this video, please make sure you click that thumbs up button. It really helps the channel. Also subscribe and click that notification. Why did I do that? Click that notification bell so that you get notified anytime I upload a new video for you guys. So starting with the volume, you can use the options volume to see how strong the position is. Just remember that higher volumes show a lot of interest in that contract. It's more liquid to get in and out of that trade faster. And this is perfect for all my day traders out there, you know, because team day trade. And looking at the actual stocks volume is going to show how many actual shares are bought and sold during that time period. So let's say our average volume is 3 million, but today we've traded 80 million. So that's pretty good. So when you look at the options underlying stock, that volume can really help to find the strength of the current price movement. And we should be looking for stocks with a trading volume no less than 1 million on average. So this is a great pick. This is Apple. And on average, we're trading 3 million. So this is perfect for what we're talking about. Just remember this, the higher the volume, the better. And this is going to be the same for the options volume. The options volume highlights the demand for that particular option series. But just know when I say option series, that means a complete contract. So it's going to show the call with the strike price, let's say 150, and then the expiration date of September 8th. So that's an option series. It shows the full option contract that you're getting into. I know that was a little bit random, but that's just a cute little fact. So keep that in your back pocket. But yeah, this is really going to be the most useful when you compare that to the volume of the stock's actual price with the average volume. So just remember, when you see the option volume, check it against the actual daily stock volume. If you see a big price increase with the stock volume versus its average volume, so that's a good sign that the price will continue in that direction. But if you see a big price change and low volume, then that can actually be an indication of a trend reversal. So make sure to keep an eye on little things like that. And just like with stock shares, higher option volume is going to be better for liquidity. So just for me personally, I like to get into an option that's anywhere from at least 500 to 1,000. So these are great because you see the volume on these are 62,000. That's really good. Okay. For example, let's say that we have a call option on XYZ with a strike price of $90 and an expiration date that's next week. Now, today it didn't trade any options at all. Nobody traded it. It was very quiet. So the volume would show 0. But tomorrow I decide to trade 100 call contracts in the morning for a day trade. And then I'm going to sell those 100 contracts like in 30 minutes. So this is going to change that option volume for today from 0 to 100. So I hope that that makes sense. Anytime you have the volume, that's when something has been open and closed, buy and sell, buy and sell. Then next is going to be the open interest. When you see the open interest, you know that those are open contracts. You have no way of knowing what was bought or sold. You just see how many. So open interest is going to be the number of active contracts open right now. And just a note, option open interest is only going to be updated when the market's closed. So unlike the volume volume, it's not going to update during the day. So when you look at the open interest, this is just going to be from the previous day until today closes. So just picture this. When you buy or sell an option, it's going to be labeled as opening or closing position. So if you buy 20 calls of ABC and you're buying to open, then that's going to increase the open interest by 20. So it's still open. But then when you exit that contract and you sell the 20, that open interest is going to decrease by 20. And then this is going to be the same for a sell to open. So if you're just outright selling first, this is what makes the open interest a little bit different from the volume, because the volume only increases, but the open interest increases and decreases. So just keep in mind, the higher the open interest, the better the option trade also. So just looking here, we see 62,000 for the volume, and then you see 36 for the open interest. So one way that you can use the open interest and the volume together is to compare the open interest to the volume of the contracts traded. So when the volume is higher than the open interest for that day, then that option was traded a lot. So that was a very, very popular play that day. And you kind of want to go with the, with the way the market is moving. We're good, smart traders. We know what we're doing. So the trend is your friend. Follow that trend. And you only want to trade options that have a lot of trading when you're buying to close. So if you're just getting into a call or a put, you really, really want to have these high volume and open interest stocks. And that's also going to be linked to the liquidity. So the higher the open interest, that's going to mean that it's going to be easier to get in and out of this trade faster. The bigger the open interest, the easier it's going to be to trade. And it's also going to have a tighter bid and ask. So I'm not sure if you saw the last video I posted about the bid and ask, but check that out. So you see right here, we have a very high open interest and volume. Look at how tight that bid and ask is. 0.32 to 0.3, that's penny. Okay, let's go to RCL. They're doing pretty cute. Okay, so you see how they have a little bit of a lower volume, decent open interest, but they have a higher spread in between their bid and the ask. So if you were looking at Tesla options and you see that the open interest is 10,000, then the market is really moving right now. And then you're going to see the bid and the ask is going to be a little bit tighter. You might see a bid of $1 and then an ask of $1.05. So with this higher open interest, it's going to be more likely to get a mid-market price, less than 1.05. So when I say that, it's going to be easier for you to get lower than 1.05. But if you had a very low open interest and nobody was interested in this stock, you're pretty much just gonna have to pay the highest price to get in here. When it's more popular, you kind of get a little discount, it's nice. But if the open interest was at, let's say 1, so there's just 1, then it's gonna be really hard to get into that trade at a good price. So honestly, I mean, it wasn't too much. It wasn't too much. That was pretty simple. But thank you guys. I hope you guys got some good information with that. But make sure you check this video out so you can learn how to read stock charts. This is going to be really important when you're looking to get into these options. So make sure to check that out.